Good evening, swimmers, and welcome to our market wrap-up to start off the week here for Monday, August 25th, 2008. I'm Joe Keenahan, Chief Derivative Strategist with thinkorswim, and I'm out here in California wearing my Anaheim Angels hat, even though I am in San Francisco, out here for the CME thinkorswim event. So in my tribute to San Francisco, a little Tony Bennett for us tonight to get the evening started. Always a pleasure to hear from Tony Bennett. But let's talk about the market. Actually, let's listen to Tony Bennett rather than look at what happened in the market today, because the Dow got smacked. Down 241 points today. Not a pretty sight at all. And if we go to look for some happy news in the advanced decline issues, well, let's look. Advancers, that would be 0. Decliners, that would be 30. There are 30 stocks in the Dow, all down today. Ugliness abounds. Starting with AIG, American Insurance Group, bad news all over the place there, down 5.5 points. I take that back. 5.5%, down 1 point, a little over a point today. And what we see in AIG is the bad news keeps coming out. Very heavy trading in there, particularly on the September 17 put line. A lot of those have been trading the last few days. Very, very heavy in there today. Something to keep in mind. Also, a 91 front month volatility. Just to put that in perspective, their normal front month volatility is about a 57. So that, as you can see, there are a lot of people with a lot of bad news thoughts on AIG going forward. It affected the entire market overall today. The financials took a whooping. Goldman Sachs got absolutely smacked today, down $4. Our friends over at the CME down 16.5 today. Not good news. And you know, as long as I'm mentioning the CME, as I said, we are out here for a CME sponsored event from thinkorswim, and we'd like to thank the people at the CME. Sorry to see that stock down 16.5. We're big believers in that exchange. So hopefully things will rebound there tomorrow. We had a stock like Google today down $7.5. Just, it was an ugly, ugly red day. The brokers and the financials took a whooping, is the best way to say it. Now, the VIX up to 2097, up over $2 on the day. This goes back to what we talked about last week. We said last week we could see volatility sell off at the first week of the 5-week expiration. This week we could see it bounce back. Would not surprise me to see a couple of more days here that are just like this heading into Friday. So we'll have to hold our breath and see what happens. All right, that's all for this evening. Thanks for joining us. As always, good health, good trading. I'm Joe Keenahan, Chief Derivative Strategist with thinkorswim. Have a great night, everyone. Thank you very much.